While you were scrolling through TikTok last week, BlackRock moved $2.1 trillion out of traditional American markets. Not 2.1 billion trillion. To put that in perspective, that's more than France's entire GDP. That's more than the United Kingdom's GDP. That's the equivalent of Italy's entire economy changing direction in silence. And nobody's talking about it. The next 18 minutes are going to change how you understand money, power, and what's really happening while the media distracts you with celebrity scandals. I need you to listen, really listen, because what I'm about to show you isn't a conspiracy theory. It's mathematical pattern recognition. Let me tell you 3 stories, 3 empires, 3 collapses, same warning signs, same sequence, same ending. Roman Empire, 250-476 AD. First stage, monetary debasement. Emperor Nero reduces the silver content of the denarius from 95% to 85%. Then Commodus drops it to 75%. Then Septimius Severus to 50%. By 268 AD, the denarius contains 0.5% silver, not a projection. Documented historical fact. Second stage, elites move their wealth out. Patricians convert their assets into foreign land. Properties in Gaul, in Hispania, in Egypt. Smart money leaves Rome. Third stage, massive tax increases to fill the void. Average citizens are crushed. Revolts begin. The empire collapses from within before the barbarians even breach the gates. Stage 1 complete. Spanish Empire, 1556 to 1647. Same sequence. Precisely. Philip II inherits the richest empire in human history. Gold and silver from the Americas pour into Seville. Galleons dump fortunes. Spain is invincible. Then comes the debt. Philip borrows massively to finance endless wars. In 1557, he defaults. Then 1560, then 1575, then 1596. 4 defaults in 40 years. And what happens? Genoese and German bankers pull their capital out. They move their operations to Amsterdam, to London. Smart money leaves Madrid. By 1647, Spain is a hollow shell. All the New World gold couldn't prevent financial collapse. Stage 1 complete. British Empire, 1918-1976. Same story, same pattern. Accelerated speed. In 1918, Britain owns a quarter of the world's land surface. The pound sterling is the world reserve currency. London controls global financial flow, 2 world wars, massive debt. By 1945, Britain owes £28 billion, 250% of its GDP. America becomes the new world creditor, and money follows. Between 1945 and 1976, British capital migrates massively to America, to Hong Kong, to newly independent colonies. British elites convert their pounds into dollars, into gold, into offshore assets. In 1976, Britain has to ask the IMF for a bailout. The empire is dead. Smart money had left decades earlier. Stage 1 complete. I know what you're thinking. That's ancient history. We're smarter now. We have central banks, economists, regulations. Really? Let me show you something. United States of America, 2025. National debt, $36.2 trillion. Not projected, actual current debt. For context, in the year 2000, the debt was 5.6 trillion. In 2008, it was 10 trillion. In 2020, it was 27 trillion. We've added 9 trillion in 5 years. 9 trillion in 5 years. Current annual deficit, 1.7 trillion per year. Every year, non-stop. That's $4.6 billion added every single day. Every single day. Interest alone on this debt now exceeds the defense budget. Let that sink in. We're paying more in interest on money borrowed in the past than we spend on the most powerful military in human history. Monetary debasement? Between 2020 and 2023, the Fed printed $6 trillion. $6 trillion created from nothing. M2 money supply increased 40% in 3 years. 40%. Same stages, same warning signs, same sequence. And now, here's the part nobody's telling you. BlackRock manages $11.5 trillion in assets. It's the most powerful financial institution humanity has ever created. Bigger than any bank, bigger than most national economies. Larry Fink, the CEO, has access to data you and I will never see. Real-time capital flows. AI-powered predictive models analyzing billions of transactions per second. private conversations with central banks. And in January 2025, BlackRock executed the largest asset reallocation in its history. 2.1 trillion moved out of long-term US Treasury bonds, destination, emerging markets, foreign infrastructure, physical gold, farmland in South America, commercial property in Singapore, European equities, Asian bonds, diversification. No, this is an exit. Deutsche Bank followed with 840 billion. JP Morgan repositioned 1.3 trillion. Goldman Sachs reduced US exposure by 27%. Smart money isn't diversifying, it's escaping. But wait, you say, that's just normal portfolio management strategy. They're looking for better returns. Okay, let's talk about better returns. US 10-year Treasury bonds currently yield 4.8%, German bonds 2.9%, Japanese bonds 1.1%, British bonds 4.2%. So why would BlackRock massively shift into markets with lower yields? Because they're not chasing returns, they're chasing safety, capital preservation. They're hedging against something. Against what? Let me explain how a monetary system dies. Not in theory, in practice. Stage alpha, loss of confidence in the currency. When debt exceeds 100% of GDP, foreign investors start worrying. At 120%, they get nervous. At 130%, they start selling. US debt is now at 135% of GDP. China held 1.3 trillion in US treasuries in 2013. Today, 780 billion. Japan has reduced its holdings by 18% since 2022. Saudi Arabia has been quietly selling since 2024. Foreign central banks are exiting. Stage beta, debt monetization. When foreign buyers disappear, who buys the debt? The central bank. The Fed buys its own treasury bonds. Printing money to buy your own debt. You know what that's called? Legalized Ponzi scheme. Between 2020 and 2022, the Fed bought 4.7 trillion of its own bonds. 4.7 trillion. Stage gamma. Structural inflation. More money chasing the same goods means higher prices, not temporary. Structural. Average home price in America in 2000, $165,000. In 2025, $417,000, a 153% increase. Median salary in 2000, $42,000. In 2025, $59,000, a 40% increase. The gap is widening mathematically, inexorably. Stage delta. Capital flight. When inflation becomes uncontrollable, asset holders flee to safe havens. Gold, foreign real estate, cryptocurrencies, anything except the collapsing currency. And that's exactly what BlackRock is doing right now. Here's the hard truth nobody wants to say. You don't have the same options as BlackRock. You can't move 2.1 trillion to Singapore. You can't buy farmland in Uruguay. You don't have access to the private equity deals Larry Fink is closing in boardrooms in Zurich. But you can recognize the pattern. You can understand that when the world's largest financial institutions simultaneously move historic amounts out of an asset class, it's not coincidence. It's a signal. Here's what happens next. Scenario A, the soft landing. Probability 15%. The Fed miraculously keeps inflation under control without triggering recession. Congress massively cuts spending. Growth rates increase enough to manage the debt. America adjusts course. Possible? Technically? Probable? Look at history. Scenario B, the Great Devaluation. Probability 60%. Inflation persists between 4 to 7% annually for a decade. Your purchasing power halves in 10 years. Wages rise, but prices rise faster. The middle class is slowly crushed. The wealth gap explodes. Social unrest increases. This is Britain in the 1970s. This is Argentina in the 1980s. Scenario C, monetary collapse. Probability 25%. A trigger event, maybe a sovereign debt crisis, maybe a war, maybe a banking panic, causes massive flight from the dollar. Hyperinflation begins. The system collapses in months, not years. This is Weimar Republic. This is Zimbabwe. This is Venezuela. So what do? First, educate yourself. Understand how money works, how debt works, how currencies work, not what TikTok tells you, not what YouTube gurus sell you. Read primary sources, read IMF reports, read treasury data. Second, diversify intelligently. I'm not talking about buying Bitcoin because an influencer told you to. I'm talking about understanding why gold has retained value for 5,000 years, why real estate survives monetary crises, why skills are worth more than degrees when systems collapse. Third, build resilience, multiple income streams, valuable skills, strong networks, physical natural resources. Because when financial systems wobble, what matters is what you can do, who you know, and what you actually own. Fourth, watch where smart money goes. BlackRock doesn't move $2.1 trillion by accident. Deutsche Bank doesn't realign $840 billion on a whim. These institutions employ thousands of analysts who do one thing: predict where value will be in 10, 20, 30 years. Follow the money. Here's the unfiltered reality. We're living through the end of an 80-year debt cycle. The monetary system created at Bretton Woods in 1944 is dying. What comes next will be either a controlled reset or uncontrolled chaos. BlackRock is making its choice. Deutsche Bank is making its choice. JP Morgan is making its choice. The world's wealthiest families are making their choices. The only question is, will you make yours before it's too late? Because history doesn't repeat exactly, but it rhymes. And right now, we're at the same verse of the poem as Rome in 250, as Spain in 1556, as Britain in 1945. The signs are there. The data is there. The movement is there. All that's missing is your willingness to see what's right in front of you. Smart money has already left. The question isn't if this happens, it's are you ready when it does? The last 18 minutes changed how you think. The next 18 months will change your life. Choose wisely.